All right, in this video, I'm going to show you the blueprint to making $10,000 per month investing in crypto, even as a beginner. And I'm going to walk you through all the steps you need to take to get there. Now, I just want to be clear about this. I'm not trying to make it sound like 10K per month is easy. It's not. $10,000 per month is a big number, and generating 10K per month on a continual and ongoing basis is definitely not easy to do. And while watching this video doesn't guarantee you'll start earning 5 figures per month, this is a blueprint you can use to get there. I've compiled all the top tips, tricks, and best practices that I've learned over the years so you can learn from my mistakes and not make them yourself. So let's not waste any time. We start with step 1, which is you need to understand what not to do. You see, most people don't get anywhere near $10,000 per month, not because of what they don't do, but because of what they do. The main problem we all face, but especially when you're first getting started, is giving in to greed. So we buy at the top after there's already a huge buzz, or we want to get involved in high-risk meme coins without understanding the use case behind them, all because we know a guy who knows a guy who supposedly made 100x. What I've come to understand about crypto investing is, much like gambling, people tend to talk much more about their wins than their losses. Anything that involves a high initial investment or gambling on high risk, high reward type of situations is really a very bad idea for a beginner. Why? Because you're most likely going to burn through all the money that you have just trying to figure out the fundamentals of crypto investing. And this happens to a lot of people, right? You come in with your $1,000 or your $10,000 or whatever, and you go all in on the shitcoin that your buddy's barber said he made $100,000 in one day on. And guess what? Your new 10K investment is now fresh exit liquidity for the other people that all want to cash out. So now you've lost your 10K, and instead of going back to your friend who gave you this can't miss altcoin, you go around telling everybody that crypto is a scam. Now, the second mistake people make when they get involved in crypto investing is they don't understand what it is that they are buying. I mean, think about this. In no other situation in your life would you go buy something and not understand what it does. If you're gonna go buy a stock, the first thing you ask is, what does the company do? If you're gonna go buy a pair of shoes, you figure out what these shoes do that makes them better than other comparable shoes. But for some reason, when we go to buy a crypto altcoin, the only thing we care about is how much does the token cost and how many tokens can we get for our $1,000 investment. A common problem people have is that they don't understand how market cap works. A beginner's mentality is to look for altcoins with an extremely low token cost, with the thinking being you can acquire more, and if they just go to a penny or even $1, you'll be rich. This is a very dangerous mindset, and one that will surely set you up for massive volatility in your investing, something that you definitely do not want, especially as a beginner. I would say that 90% of crypto investors, and especially investors that are new to the space, don't understand, and something that's going to save you from making some serious mistakes when investing in the altcoin market is, most new investors tend to only look at the token's price and completely ignore a token's market cap. So to better understand what the market cap is and how it works, let's look at this example. During the last crypto bull market in 2021, a lot of new investors bought tokens like SHIB and XRP and Dogecoin simply because they were really cheap tokens, all three under $1 per token, with the thinking being you could just buy a bunch of XRP or a bunch of SHIB or Doge for not a lot of money. And even friends that would call me to talk about crypto, they would always ask, like, why is XRP so cheap, or why is Doge so cheap compared to something like a Bitcoin or Ethereum? So it's really important to understand that the price of the token does not tell us the whole story when it comes to determining the value of a project. The price of the token is only one piece that tells us how valuable a cryptocurrency is. And the other piece is how many tokens there are in circulation, and also the total amount of tokens that there will be in the future. So if we take a look at the top assets in the world by market cap, we see that gold is number 1 by an overwhelming margin with a market cap of over $15.6 trillion. Of course, we get this number by multiplying the amount of gold that there is in circulation by whatever the cost of gold is per ounce at the time. And the top cryptocurrency, Bitcoin, is currently number 9 on the list, just behind silver, with a market cap of over $1.3 trillion. So the reason that I bring this up is to paint a little picture for you, because when you hear people talk about $10 XRP or $5 Dogecoin or even $1 SHIB, Now, I'm not saying these things can never happen, but to put it into perspective for you, XRP is currently trading at about 53 cents. So for it to go to $10, that would be about a 20x in price. And with that 20x in price would also come a 20x in market cap. So if XRP were to go to $10, the market cap would be roughly around $600 billion, meaning that XRP would be worth more than JP Morgan Chase, Tesla, Visa, and ExxonMobil. Again, I'm not saying it can't happen. It just seems a little bit unlikely because you probably can't find 10 people to explain to you the use case or the value proposition of Ripple. And that leads me to the next point, number 3 on the list. Really understand what it is that you are investing in. If you want to generate higher returns on your investments month after month, you're going to need to invest in high quality projects. And the only way to know if a project is high quality is to learn as much as you can about it. It's popular to hear every crypto talking head on YouTube tell you to do your own research. Like somehow if they say that and then the altcoin shits the bed, it's your fault, not theirs, because you didn't do your research. But this is what it actually means to do your own research. The first question I like to ask about a project is, what is the use case? And more importantly, what problem is this project solving? Once you establish this, ask yourself, is this a legit problem, or is this just tech bros solving problems that don't need to be solved? After you understand the use case, move on to the team. You want to know the history of the key members of the team. Even though there are seemingly an infinite amount of crypto projects, the crypto community as a whole is pretty small. Generally, a reputable crypto project will have a docs team and will be completely transparent with their intentions for the direction of the project. You have to remember that you're investing in the people behind the project and their ability to execute as much as the potential of the project itself. So it's important to understand that the success of any altcoin project ultimately depends on the team's ability to see it through. If you're finding it hard to figure out who the people are behind a project, then you probably want to approach investing in it with extreme caution. Think about it this way. Would you do business with a bank that refused to tell you where they were located? After you have a good feeling about the team, you next want to move on and explore the community around the project. Now, personally, I think the best places to get a good gauge of the community around an altcoin project are X, Telegram, and Discord. A good crypto community will generally have an overall positive outlook on the project, the team, and the future of the brand. You should always feel free to ask any questions you have about the project, and a solid community will be happy to answer them. And if they can't answer them directly, they should at least give you some direction on where to find the answers. If the channel moderators make you feel stupid for asking any questions, or if the room is just a bunch of moon boys hyping up free giveaway spam shit, then that probably tells you all you need to know about the project. Really what it comes down to is you can't do too much research on any crypto project that you are going to invest in. And since we know from our good friend Gare Bear,
look, this field of crypto investing, a lot of investors should be aware. This is a field rife with fraud, rife with hucksters, and there are good faith actors as well, but there are far too many that aren't.
It's always best to err on the side of caution. All right, let's keep it moving because I want to talk now about some of the things you can and should be doing to start generating a high monthly return on your crypto investment. So look, the first thing we'll talk about is just straightforward crypto investing. Once you have gone through the steps of due diligence and found a project with a legitimate and necessary use case that you want to support with an experienced team and a dedicated community, now is the time when you want to do further research into the price of the token. And there are plenty of ways to do this, and you don't necessarily need to be a technical analyst. There are a couple of free tools that are simple to use that will actually provide some valuable information as far as when is a good time to buy more crypto. First, have a look at the Crypto Fear and Greed Index. I will link it in the description box below. While this doesn't actually predict if the price of any cryptocurrency will trend up or down, it does give us an overall outlook on the current market sentiment. The Crypto Fear and Greed Index gives you a visual that will allow you to buy when there is fear in the market rather than greed. And that's the best motto to live by when it comes to crypto investing. Buy fear and sell greed. Another indicator to look at is the trading volume of the token. It goes without saying, but when the trading volume is higher, there is more interest in a project. Because of this, the price is generally higher than when the trading volume is lower and there is less interest. You can look at the weekly or monthly chart for trading volume and exercise patience when looking to buy. And then I also like to look at the data available using Google Trends. You can type in any keyword or phrase and see how much interest there is around that specific keyword. So an ideal buying situation would be one where there is fear in the market, the trading volume is lower than average, and the Google Trends data is showing less interest than normal. Because remember, before we even get to this point, we have already done all the research. So we know we have a good project. The value of the token is all subjective and temporary. So we want to buy when others are shying away. Now, in most cases, this type of straightforward investing is not going to net you $10,000 per month in returns right away. This is more of a slow play designed to allow you to compound returns without the high risk of losing big in the beginning. So if we look at the other side of buy and hold crypto investing, that would be crypto trading. Crypto trading is more about analyzing and taking advantage of short-term opportunities or inefficiencies in the market. Now, unlike with long-term buy and hold crypto investing, my advice if you want to get involved in trading cryptocurrencies, whether it's daily or weekly or any other time frame, you have to have a good understanding of technical analysis. And if I'm being completely honest, technical analysis isn't very difficult to learn, but there are a lot of different components to it that make it very time-consuming to master. So if you do want to be aggressively trading your crypto, make sure you take some quality courses that will teach you how to break down charts and analyze different patterns and trends. And if you don't want to do that, my suggestion is you find someone that knows what they're talking about and follow their advice. The problem is X and Telegram are full of so-called experts, so it's really hard to know who to trust and who provides accurate information. What you need to do, just like with our research into crypto projects we plan on investing in, we must also research any potential technical analysts we will trust for investment advice. And this is actually pretty easy to do. It's just a little bit time consuming. But you can go back and look at their past tweets or posts in different Telegram channels, check and see if they were right, or better yet, what percentage of the time were they right. Also, read the comments. Usually when someone is giving bad advice repeatedly, people will have no problem calling them out in the comment section. And when you do find someone who seems good and seems trustworthy, someone who you feel confident investing your hard-earned money based on their predictions, you probably want to find out if they have a Patreon or some sort of premium channel. In my experience, if you're going to be trading regularly and are serious about earning real returns, it's probably worth it to fork over $20 or $30 per month to get the best information before everyone else. Additionally, it's also good to follow some of the top crypto sleuths on X who are always exposing scams and bad actors in the space. Two accounts that I personally like are ZachXBT and Kara Zabo. I'll link both in the description box below. All right, the next two options for generating a return have to do with the creation of new crypto. And this is something that I love because when we talk about the dollar, we all know that there's a seemingly endless supply.
Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
But it's always very confusing for me because how do they know how much money to create or where the new money should go? But with cryptocurrency, most of the projects either use proof of work or proof of stake as a consensus mechanism. And because of this, it's very transparent, and we know exactly how many new tokens are being created at any given time. And also, anyone can participate in the validation of transactions. And because new tokens are only created as transactions are validated, this means that anyone in the world can receive newly minted tokens. So for cryptocurrencies like Bitcoin and other proof-of-work altcoins, the process of validating transactions is called mining. And the mining process validates blockchain transactions and adds new blocks to the chain. The miners are then rewarded with native cryptocurrency as a result of their efforts. The problem is, to mine something like Bitcoin, you need to have a lot of computing power, which is expensive, and it also consumes a lot of power. which is also expensive. So if mining is something that you're interested in, it may be worth it to look at a cloud mining solution. Cloud mining allows you to mine a cryptocurrency, such as Bitcoin, using rented cloud computing power without having to house the hardware and run it yourself. The main advantages of cloud mining are that it reduces the cost and space needed to run your own Bitcoin mining farm. And it also allows more of the everyday investors to get involved mining crypto. The disadvantages are that cloud mining makes cryptocurrencies more centralized, and your profits are reduced because they are pooled and shared. Now, in addition to mining, there is also staking. If you hold a token that operates on a proof of stake consensus mechanism, this means that people are staking their tokens as collateral to ensure that they validate transactions fairly. And this is something that anyone who holds the token can participate in. And just like with mining, stakers are rewarded for validating transactions correctly. Now, obviously with staking, the more crypto tokens you have staked, the higher returns you'll have, but you can definitely earn some real returns by staking or mining. And if you don't believe me, check out this video right here where I show you how I personally make $900 per week staking my DOT tokens on Polkadot. And if you're just getting started, you should really just be focused on one thing, and that is compounding. Everything is about compounding, whether you're compounding your investment or your share of a mining pool or your stake in a cryptocurrency. You just need to keep compounding your gains into more gains. All right, the next option we need to talk about is crypto lending. And with crypto lending, there's actually a few different ways you can earn some really nice returns on your crypto investment. So obviously in a regular lending situation, we have a lender and a borrower, and in crypto lending, it's no different. Crypto lending can be a good option if you need cash quickly, as it allows you to utilize your crypto holdings as collateral to get a secure loan. This allows you to get money you may need without having to sell your coins or tokens. You can then use the cash to do what you need and then repay the loan to get your crypto assets back. And if we look at it from the side of the lender, lenders can use their crypto holdings to generate dividends by lending out to those that want to borrow. If you do want to get involved in borrowing and lending, you definitely want to read and understand more about it. I'm going to leave some good resources in the description box below. But real quick, as a borrower, the main thing you need to be aware of is a margin call. And a margin call in crypto is when your account balance falls below the required margin level. This means when you take out a loan, you put up a certain amount of collateral based on how big of a loan you want to take. But since the collateral is in cryptocurrency, the dollar value can fluctuate. If the value of your collateral fluctuates down far enough, you will need to deposit additional funds or assets to cover the discrepancy. So this is my blueprint for crypto investing, trying to put as many of these tips and skills into place in a way that works for your own trading strategy is going to help you stay ahead of 95% of the people out there that are just chasing the latest hype from influencers. It's time for you to stop buying the top and selling the bottom. And if you like this video, you may want to check out this one right here, where I show you how to master the psychology of crypto trading. See you next time.